What is up, everyone, and how are you all doing? It's Wednesday. It's hump day. It's FOMC day. Let's hope it's a good one, everyone. How are y'all doing? Been hanging out with the chat for a while now. Been having some fun. A little bit of early chat action, a little bit of overachievers hanging out today. What is... Oh, shit. Hold on. Let's see. Yeah, I'll kill that light. That might help us out a little bit. Sorry. I got a new setup here. Okay, not a new PC, but I got a new video and sound setup. So I'm working on that. This is going to be my first stream with the new video and sound. I got some wraparound monitors and stuff. I got a new boom mic set up. And I've also got new sound software. So we're going to give it a try. So what y'all have to do is let me know what you think of the sound. Anyone? Anyone want to let me know in the chat what the sound sounds like? A lot of you are saying give us the 25. In fact, 48% of you are saying yo. Just the tip with 25. Landon says it sounds great. Greetings from Germany. Well, thanks, Andreas. I haven't been to Germany in a couple years. I think I need to make my way out there. I'm going back to GT. I think I'm going to go back to GT again a couple more times. There's quite a few things I want to explore there. But then I think I got to make a European trip. But I got to get healthier first before I do that. We got Florida in the house. Loud and clear. Everyone is saying, well, thank you. 47% of you say he's giving us 25. 25% of you say he's pausing. And 27% you think he's dropping the big 50 on us. Damn, y'all are some optimistic people. Holy shit, man. Wow. Steve says, sounds like you. It better sound like me. Ain't no AI imposter. Ain't no AI, no nipples Klaus. No. You see the photo behind me up on the wall? There's nips in that photo. I'm shirtless. That's not AI Klaus. Dude, that's real jacked up me, and that's from like 2 years ago. Yeah, baby, we don't need this. Oh, man. Greece is in the house as well. Idaho Falls. I almost said Iowa Falls. Idaho Falls hanging out. Arkansas. Love it. Oh, the Bronx. BX all day in the house as well. Loving it. Make sure y'all hit the like button too. It helps push things out. So, what do we got going on? Let's just go for a quick roundup of what's up. Okay, right now, it is 1:40 p.m. The Fed releases their statement, okay, at 2 p.m. At 2 p.m., we're going to go nuts, and we're going to keep, refreshing. Got Texas in the house. We're going to keep refreshing, and we're going to do it, okay? At 2:30 p.m., that's when he goes on the mic. That's when the market is going to be very interesting. So, let's pay attention. Titanium, dropping some support on the channel. Titanium, thank you. Greatly appreciate it. Everyone give Titanium a big thank you. Let me take a swig of water. As you can tell, I'm a little nasally. Sorry, everyone, a little nasally. All right. I'm breaking like all the rules. Remember like when we went to school and you had to do the computer class? I'm breaking all the rules. I've got like food on my desk. I've got water on my desk. I've got 3 monitors on my desk with food and water on it. That's not good. Throwing it on out there. Yes, 2:30 for the Fed website is when he comes live on the mic. That's always at 2:30. At 2 p.m. is when they actually release what the amount is, or if he pauses. Chris Thibodeau says, what up, Klaus? You're the man, by the way. Well, thank you. I appreciate that. Jimmy is in the house as well. Jimmy, OG viewer status. Today can be a good day to have a good day. Today is a good day. No matter what happens, today is a good day. I'm going to start being just not overly positive, but more positive. I've got my own internal frustrations, my own frustrations with life going on. And to combat that, I'm going to be a little bit more positive. Like I said, not overly positive, but positive. Wales, UK, hanging out with us, saying pause. Ooh, dang. St. George is hanging out with us as well. Florida, or Flo Rida, like the rapper, the artist, Flo Rida. Dude, just throwing it out there. Krishna's hanging out with us as well. Ice Cube. No, I was not listening to Ice Cube. I was listening to Korn's Helmet in the Bush, though. Just throwing that out there. Yeah, what's up to you? Rafa's in the house as well. Greets to you. And lots of dog toys to your dogs. Yeah, I did. I bought my dogs all new toys, all new chews, all new treats, and balls. You gotta do it. You gotta keep the dogs happy. And I finally found the filled shin bones that I got my dogs like 3 or 4 years ago that they absolutely love. I finally found them, so I got them a package of those. Neil says it sounds good. Well, thanks, Neil. Sacramento's in the house. West Coast is the best coast, but you know the deal. I say the East Coast is the beast coast. Come trail run with me on the East Coast and let me know how your feet feel afterwards. Oh, Tom says, what's up from Chirac? Ooh, I used to live in the Chicago burbs. What's up to my Chicago peeps? Colorado up in the house. 420 action as well. 2 p.m. we talk, yes, rates. We've got what, everyone? We've got crypto action. We've got heat maps. By the way, this heat map that's on the screen right now, this heat map is based on volume. So I want to see if something kind of becomes juicy during this. Like this, does something move around volume-wise? Not necessarily price-wise. Obviously, price-wise, we're going to pay attention. But if the volume becomes juicy. We got a lot of UK fans in the house, Netherlands as well. Scrooston, Texas, St. John's, Brunswick, LA, California, and Washington. Dal ass, but not your ass. What's up, everyone? We're only, 16 minutes away from the announcement. Shitlanta. Shitlanta's not bad. Come on now. I live close to Atlanta. It's not that bad. Corn, yes. Thank you, Jimmy. Rock on. Yes. Atlanta's not that bad, everyone. Let's just be real here. Atlanta's not. The traffic in Atlanta sucks. It is very busy, just throwing it out there. Adidas, my favorite song, or one of my all-time favorite songs. Yes, thank you, Korn, as well. Hopium, 50 points. It's by Gringo Bandito. How many gringos do we have in the house, huh? Steve Cameron says, Klaus, after today's raid announcement will be 1985 Escort time or Lambo time. Here's the problem, all right? If we start going into a recession, we're going to have to cut rates really, really fast to avoid a recession being rough. Your bigger problem isn't going to be like, oh man, rates, this is bullish for us. No, your big problem is going to be recession. Crypto will not do well in a recession. Crypto is based on risk, right? And you need a lot of money to play in risk, right? Yeah. So if all of a sudden there's a recession, people pull back their spending. If all of a sudden you're afraid of losing your job, what do? You stop spending as much. It's plain and simple. You start cutting things that aren't necessary. And for a lot of people, that would be DGen World Crypto. Korn is in Ottawa tonight. When I saw Jonathan Davis 2 times ago when I saw him, we got really up close to stage, my wife and I did. We were in general admission. And we saw him actually hitting the oxygen tank. You could see it in between like segments. He would just like get up, kind of like hide behind the little box. They had like, the big speaker boxes, like the black sound boxes that have like the stainless steel like border things around them, like especially on the corners and stuff. And he would get behind it and just hit this oxygen tank and then come back on and just start playing it again. It was really cool. The guy still has a really good voice. SoCal in the house. What's up, Levi? Oh, God. No, Levi is a ripoff. Come on. Loving it. You know who else is? The Sailor Dog. By the way, a lot of people troll him in the comments, too, man. Just throwing it out there. Like, when he posts this shit, you would think it's a lot of people, like, coupling under his sack. No, man. They roast his ass. Damn O says, Klaus, you think the rate cut is already priced in? Yes. If we get a 1/4 point, I think it's priced in. I think you'll get a little bit more positivity from the market because then the market will breathe a sigh of relief. But the reality is, hey, 25 points is what people are expecting. We're not expecting a 50 and we're not expecting a pause. Either of those will really move the markets. Sam Slamstrong says, here's to hoping I'm wrong on the pause. Same, Sam. Same. And everyone give Sam a big thank you for supporting the channel. Yeah, Sam, I I'm just basing this on what Jerome has done his whole tenure as the Fed big guy. He's always been late and he's always been behind. And here's the other problem. CPI data spiked. So now you had 1, 2, 3 out of the last 4 months it go up, and that's not good. That's not good. You don't want to. Oh God, I know. I hope he cuts. Just throwing it out there. JDW says, Klaus, you got the best backdrop. Keeping it real, because it's all shit that like I've earned and done. And hold on, everyone. You mentioned backdrop. Hold on. I have 2 towels behind me on my racing road bikes. Thank you very much. Yes. One of these is from the Western Conference Finals game with the Blackhawks, and the other one is from the 2015 Stanley Cup Final game that I went with my wife. Just throwing it out there. Oh, shit, that hit the floor. Yeah, so cool. Yeah, background's pretty legit. I like it. I like that. I like the sign. Oh, yeah, I love the sign. Hello from Bavaria. It's where my family's from. Upper Franconia. Love it. Bavaria. Going to a little bit of, I don't know, a little bit of Bayreuth in Bavaria. Oh, yeah. Yeah, we could do a little Bayreuth in Bavaria. Finland in the house as well. Oh, nice. See, the sign is cool. I like the sign. I'm just throwing it out there. Love the sign. What else do we got going on? We got people sharing pics of doggies. Yeah, lots of pics of doggies. It's been so cool. Thank you, everyone, for the support. I just really have been very appreciative of it. We got 11 minutes till the announcement. Landon is a supporter of the channel. Thank you very much, Landon. I prepared my own pictures because I had my own sad doggy story. So, if you guys and girls don't mind, okay, just hope you don't mind, I got a few pictures ready for you. So this was 2021. My doggy and I, we had to climb this rock avalanche right here. It was really, really cool. So we got a chance to climb up on this. Her and I actually climbed the peak of this mountain right here. Yeah, it's pretty cool. And that's this doggy right here. And her and I have actually been all over the place in the San Juan Mountains in Colorado. Her and I have spent tons of trips out there. Every year we would go out to the San Juans in Colorado. And that's like my big thing. Like every year, like I turned down going to Meridian so I could go to the mountains in Colorado to hike and climb with my dog. Like that's how much like that stuff means to me. So yeah, it was cool. I got some time to hang out with my dog there. And there's her and I. Now, if you notice, you see these tracks right here? We're at about like 11,500 feet or something like that. And check it out. Those are like push rail car tracks, like from a gold mine, an abandoned gold mine in the mountains. How freaking cool is that? See, and I got my doggy there. She's all covered in mud because she kind of does her own thing. I don't have to worry about her. This is her and I at the top of some mountains. Just throwing it out there. Michael P. dropping some support on the channel. Says, Klaus, you tell it like it is. Your channel is the only one that says it is like it is. All facts. Whether it is what we want to hear or not. Landon just sent out 5 memberships. Well, thank you, Landon. And thank you so much, Michael. This is my beautiful princess right here on the top of the mountain. And here's another picture of her. And we take all these treks out. And we've done tons of 14ers. We've done tons of 13ers, which is 13,000 foot mountains and 14,000 foot mountains. Her and I, we've gone to all these cool mountain lakes. Dude, it is awesome. I have taken this dog everywhere. This is kind of like an idea of what our trips are like out west. Just, you know what I'm saying? Just throwing it out there. Yeah. Dog stuff. And I got a couple more. I'm just sharing. We did this one right here. Her and I did this one. And like I said, we did that one. That was really cool. That one was a heck of a lot of fun. We had so much fun doing that one. See, this is her just playing out in the fields in the middle of the mountains, right? Isn't that pretty cool? Just throwing it out there. Nature Creator said, did the dog die? Yes, we had to sadly put her down on Saturday. She got sick fast, like freakishly fast. So my dog here, we did this traverse right here. This is her at the camp. This is her up on the mountains. Yeah. See, and this is like what her and I did. We did stuff like this all the time. Just throwing it out there. The elevation does affect dogs. They have to hydrate a lot. I mean, we have to hydrate a lot too. But you have to make sure they are drinking tons and tons and tons and tons and tons. So what happens is when you're doing these trips, whenever I plan trips with her, I plan trips usually the day or two after it rains. And the reason I do that is then all the minor little tributaries, the little creeks and shit like that flow on the sides of the mountains. So like if you look at some of these mountains, I'll show you a picture real quick here so you can see what I'm talking about. If you zoom in and look at these mountains, there's like all these little like cuts, right, that get worn in here. Well, a lot of them have water most of the year. Well, some of these don't have water unless it rains. So what we do is we go and we pick days after it rains, so we know all these little like creeks and all these little runoffs and washouts are filled with water. So that around like the 12,000 foot mark, when that stuff kind of goes away, we know she's hydrated enough to make the big push. So yeah, you totally got to watch it with dogs and up there with the food. And she's just a really sweet doggy. So yeah, sorry, I just wanted to share that with everyone. Dogs really, you know what I mean? They're big parts of my life. Oh yeah, you got to have them with electrolytes and foods too. She likes saltine crackers. That was her big thing when we hiked. She liked saltine crackers and she liked gummy bears. I kid you not. If I brought saltine crackers and gummy bears, her and I could hike like the highest mountains in the world. It was absolutely freaking nuts. Right now, XRP sitting at $3.04. Landon dropping support on the channel. Thank you, Landon, and thank you for gifting it out to me. Landon says 5 minutes till 50%. In your opinion, dude. Okay, here's the thing, Landon. If he drops it at 50, don't get me wrong. I like that. All right, I like that. The problem I have though is, does it give the market the sign that he screwed up? That he was too late to the party? You know what I'm saying? Like, does Jerome drop in the 50 on the market all of a sudden tell the market, dude, I screwed up. Now I have to hit us with a 50 because I may have overcooked things. I mean, and then if recession is the big fear, dude, we don't even care what the hell the rates are. We're just worried about keeping our jobs, right? Like, you know what I mean? We're going to get the rate announcement here in 5 minutes, all right? And then at 2:30 Eastern time, we are going to get Jerome Powell live stream action. Just throwing it out there. Tyler Rice dropping support on the channel, says no rate cut. Powell is who he is. Stagflation remains. Wow, Tyler, thank you for the support. And remember, Jerome Powell and the Fed also said that inflation was transitory and that we were going to be over it real quick when we had the old pandemic. Well, here we are, zoomed out almost 5 years, and we're still dealing with high prices. You see what I mean? So this dude was wrong with that. He was wrong when it came to raising rates. He was wrong when it came to cutting rates. I mean, this guy is just... Oh, yeah, transitory. For real, he said it was transitory. This is what he said. He said it was transitory as we were just getting into this section right here. And then only to find out we were going to just get blasted in the next 4 years with inflation. Right now, CME Group, let's just take a look because I'll have their odds. And then let's do this. Let's go to Degen World a little bit. Fed rate decision. You guys want to see what Degen World has for Fed rate decision? 2% of them are saying pause. 94% are saying 25 point hit, with a 50 basis point hit, 6%. The CME Group right now is 0% chance pause, 95.8% a quarter, and 4.2% at 50. Just throwing it out there. Gravity Junkie says a quarter is too little too late. Well, that's also the problem too. Like, dude, if it's really too little too late, then, I mean, aren't we kind of screwed a little bit too? I mean, think about it. Like, what if like, okay, let's just pretend, all right? Because we've got 3 minutes until he gives or drops the announcement, okay? What if everyone watching right now on stream was afraid of losing their job? Even if you're an independent contractor, self-employed, what if you were afraid revenue was going to drop 20-30% like that because everyone was afraid they were going to lose their job? Then rates don't really matter, do they? No, because everyone's in freak out mode going, oh crap, are we going to lose our jobs? And if you think you're going to lose your jobs, what do? You really reel in your spending. You really kind of like pump the brakes on Big Daddy Warbucks spending, right? So if all of a sudden a ton of people are thinking, oh crap, we might lose our jobs, dude, business spending goes way down. So then what happens is this, you start paying attention to quarterly financial reports, all right? Looking at the revenue lines of sales companies, your Walmarts. You start looking at like your Home Depots, your builders, right? You want to see that. You want to look at travel, discretionary spending to see if people are really in. It all kind of like works in together. So yeah, just kind of something to pay attention to. Will Good Golf says, wish I'd lose my job. What if it's a job from the old wife or partner? It's got, we got 1 minute left, everyone. Let me get a quick drink here. I will start refreshing this like a fiend, and then we'll see what happens with J. Powell on the screen. Yep, I'm just hitting the refresh button, staring at the old Garmin, waiting for 2 o'clock to come. Are y'all freaking out too? I'm gonna do this. I'm gonna end the poll real quick. Let me do that. End the poll. There we go. Poll ended. All right, let's see. There's your poll. There's your poll. Here we go. Let's see what he says. We should have that announcement any second now. I'm gonna keep hitting refresh, and as soon as it hits, we should be getting it, which should be any second. Come on, Garmin. Go to 2 p.m. Damn it, Garmin. Here we go, 2 p.m. All right, my Garmin just said 2 p.m. right now, so we got to give the government interwebs time to upload the shit. Oh, wait. I just had a pause. Come on. Here we go. Are you ready? Here we go. I've got it. To support its goals, in light of the committee decided to lower rates by a 1/4 point. The Fed has cut. Repeat, the Fed has cut. I'm going to actually put that in the chat. Give me a second. Hold on a second here. He has cut it by a 1/4. That is a 25 basis point cut for the Fed, everyone. Jerome Powell coming in with the 1/4. All right. How are y'all feeling about that? 25 basis points. We're gonna switch over here to the old heat map. See if the markets start reacting and roaring to this. Hold on a second, Rothschild. Trying to get a few things set up. Give me a second here. I've got 2 screens going on. So we're going to start paying attention to crypto prices. Let's zoom into the 1 day right here. See if anything starts happening. Yeah, you know what I'm talking about. We'll go into here and see if the juice goes on. Give me 1 second here. I got to put something up on my screen. So yes, that is a 25 basis point cut from Jerome Powell and the Fed, everyone. Yes, 25. We got a 25 BPS. All right, there we go. How are y'all feeling about that? I mean, yeah, 25 was priced in. I think we all knew that was happening, right? I think we all knew a 25 was pretty much baked in. I mean, it's better than pausing. I'll be honest with you. I was really expecting a pause. The market's not really digging it too much. Look, everyone is swinging neutral right now. And we're going to go to the change on the 1 hour real quick because we want a real tight window. Better than a kick on the bullocks. Yeah, it's something. Better than a pause. Finally, but late. Yeah, we're all thinking the same thing. It was his talk that pumped the markets, and then the actual announcement is not doing much. Lowercase p, I like it. Dovish talk equals pump Aroni. Super dovish, 3 cuts for 2025. Y'all are being optimistic on this one. Yeah, I mean, We got the quarter cut, but what if the job market sucks, everyone? I mean, that's the problem. Glenn says if he would have paused, we would go deep in the red, you bet your butt. But remember, don't react to the initial move of these announcements. Wait for Jerome Powell to talk and wait for about a half hour, an hour after the market has digested the information to circulate it in order to see the full reaction, all right? What you see right off the bat is all the bots and the BS like that. What we're looking for, more importantly, is what Jerome Powell says, and that comes on at 2:30. And you know what? I don't think, now that he's done this, I think this opens the door now for several more cuts this year. At least one more. At least one more cut. But the market honestly looks at it, and the market's going, hey, we really wanted more than this. We wanted 50. I mean, Bikes and Wrenches says, too little, too late. Ooh, too little, too late. Yeah, I don't know. I mean, I don't know. It's not that juicy. It's what the market was kind of expecting. I mean, XRP is kind of moving, doing its thing. I mean, we're waiting for volume to start going. Give me a second here. We'll get some stuff up here. Volume is starting to go. Let's go to that one here so we could open that up. Oop, give me a second. Hold on here. Hold on. Here we go. All right. So let's go to this and let's get even tighter than the 15. Let's go to the 1 minute chart and see what things look like here. Let homegirl think about it. And there you go. That's what the 1 minute looked like on the announcement right there, if you wanted to see it. And no, I honestly thought he was going to pause. I was hoping he would give it a quarter, but I thought he was going to pause one more time. I mean, it is what it is. The market wants more. Plain and simple, the market wants more. And you can see it, the market, right, moving exactly during the announcement. Priced in. Yeah, I said pause, everyone. My thinking was pause. I was hoping that he would drop a quarter. That was my thing. I was hoping he would drop a quarter, but I was really, really nervous about the fact that he would pause. Yeah, Poly Market was really close. They were really close. Even CME Group was really, really close. Their last one was 95.8 before for the quarter. So they were really close. When's the next meeting? The next meeting is October 29th, everyone. October 29th is when the next one. So you've got one in October, one in December. That's what we're looking at right now. Overall, in the crypto market, yeah. It is what it is. I mean, it's priced in. I mean, I was thinking pause too. Jerome Powell speaks at 2:30 p.m. Eastern time, so he will be on the mic in 24 minutes. Yes, we got the cut. We got a 25 basis point cut. Let me open this PDF up here real quick. Here we go. I'll read to y'all what his letter said. Just the top part of the letter. Recent indicators suggest that growth of economic activity moderated in the first half of this year. Job gains have slowed, and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. The committee seeks to achieve maximum employment rate at over 2%. Uncertainty about economic outlook remains elevated. The committee is attentive to the risks of both sides of the dual mandate, blah, blah, blah. To support the goals, the committee decided to lower the target range for the federal funds rate by a quarter. There you go. That's what you got. They can punt one more time. Yes, I believe. I believe they can punt to November for a lot of them. I believe that's what a lot of them are. They can punt to November. There's a gentleman on Twitter, and it's not Nate Girassi. If I find it, I'll share it with y'all in a video. There's a gentleman on Twitter who's got an ongoing live spreadsheet of all the ETFs, when their cutoff dates were, when their rejection dates are, and their drop dead dates are. When I find that next, I'll share it, save it, and share it with everyone. Let's see. Notice no mention of tariffs. Yes, no mention of tariffs at all in here. Really just a short, very short announcement. Nothing too crazy. The committee will continue its reducings of holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. There you go. That's what you got right now. You got the quarter. Is this what y'all were expecting? I mean, it's the market's not doing too much on it. I mean, you go to XRP, we're kind of bouncing all over the place. I mean, at first people sold and then they kind of got back, so that you could tell that was a lot of bots instantly just dumping it. I mean, yeah, it was definitely priced in 100%. 2:30 when he talks. Yep, 2:30 indeed is when he talks. I don't know. I mean, it is better than nothing, but I just... The issue is he should have cut rates months ago. He should have given us a quarter a couple months ago, and then should have seen what that did and what impact that had on the market. That would have been the best. Now we got to start seeing what happens for the market for the rest of the day. Does inflation keep upticking? If inflation keeps ticking up and we start worrying about recessions, how the hell do you think everyone's going to feel? I mean, think about that. If that's a big problem right now, that inflation is going up, and it's a big problem that recessions are becoming a risk, now not only are you worried about losing your jobs, you're also spending more money while worrying about losing your jobs. Yeah. 2:30, what time zone? It's 2:30 p.m. Eastern time. So in 20 minutes, we will have Fed announcement. 20 minutes exactly, we will have Jerome Powell on the mic. The Fed has their own channel right here on YouTube, just throwing it out there. As soon as they do, all right, so they've already got their thing up right here. Let me mute this. I'll put this up on here. As soon as it goes on, we'll switch it on over, and you will be good to go. Ready for melting faces. Yeah, I know. WPX Taco Band says, you said if we get 50 BPS, that would imply jobs are possibly too far gone for a rate cut to be bullish. Yeah, this should be the better news. And of course, you're short in the market. Yeah, I mean, the big issue though is if we're facing a recession, right? Hold on, let me. There we go. Sorry, I didn't have that muted. My bad on that one. Sorry, I heard the, like I said, I got a new monitor and a new sound system, so I'm still working on that. My bad. I got it. I fixed it. I got it. I muted it. It's muted. It's off. I know. I got it. I got the music. I got it. All right, let's see what we got. We got 18 minutes. We got an open mic session right now. Poly market was dead on. Well done with that Poly market. Do they have a next one? Let's see. Fed decision. Oh, they do. They have one in October. Here we go. Here's the Poly markets one for October. 76%, 25 cut again. 15% chance pause. 50 or 10% chance 50 BPS decrease. You cannot mosh to that. Come on now. Just throwing it out there. Silver bug here. Silver will hit $50 by 26. Silver will roar. If we start having recession fears, silver will frickin' roar. So will gold. All the risk assets will suffer a little bit because of what, everyone? Yes, because of concerns about recessions, and then there you go. Right now, you're seeing Poly market increasing their odds since the 5th of September for a quarter cut in November. Just throwing it out there. I am Oscar Ramos. Things are going to explode tomorrow. Isn't it going to explode every next day? Like, haven't we heard that now for how many times? I mean, like, for real, can't we go on here and we can go onto here and we could put in, like, pick like any crypto, right? I mean, you could search XRP explode. Oh my God. And you can find it. Oh, XRP just clocked 27 million traded in 1 minute. Whoa, whoa, whoa. Like, dude, these people are just freaking horrible. They are just really, really, really horrible. So, just throwing it out there. Supply and exchanges collapse. Is a super squeed about to explode price? Whoa. Oh, cryptocurrencies and Ripple will explode. BlackRock says the Fed should cut by 50 basis points. Whoa. Dude, Twitter is fucking degen world, man. Twitter is seriously filled with so much freaking garbage, man. So much freaking garbage. Oh, God, this is horrible. Oh, man. Powell will cut rates this week. Crypto will explode. BTC to 150,000. What? Wait, what did you just say? Did you just say BTC to 150,000? We're at 115. ETH to 10. We ain't even close. XRP to $10. Come on, man. Come on, man. Twitter, everyone, degen world, to say the least. Right now, though, we're watching some action happen up on the screen, taking a look at the overall crypto market, looking to see if there's anything popping out at us right now. XRP 303, Cardano 87 cents, Link at 23 bucks. Yeah, just throwing it out there. The market was basically like, all right, 25 is what we expect, but you want to make us happy, you give us a 50. XLM 38 cents right now, HBAR 23 cents, Toncoin $3. That's been one that's been kind of struggling here to make the big move. BNB, man, I'm telling you, BNB is going to be at 1,000 before we know it. Before we know it, BNB is going to be coming down. Yeah, heat map's not starting to look that hot. Like, you can start seeing a bit more neutral color, starting to see some more things turning red. Yeah, I mean, Ronnie Gibson says, I can only imagine the Sailor AI picks if BTC hits 150,000. Well, you know, I'll share it with you. Why? Because, like, I got to. Like, it's my job. Like, I have to share with you Michael Saylor's, like, AI art picks. I mean, look. Take a bite. You have to peel the orange first, you idiot. See, this is what we deal with here, everyone. Take a bite. Couldn't you... God, people are stupid. Oh. Francesco says, what about Pi? Well, the problem with Pi is not doing good. Pi is not doing good at all. Just throwing it out there. Waiting for Jerome Powell to come live. Got a bunch of you hanging out with us today. Make sure you hit that like button to share it. The markets are not really liking the action. I mean, the markets honestly are wanting more. Time to play Tarkov and keep stacking. Yeah, don't play on Woods. I'm coming for you. Woods or Interchange. I've been hitting Woods and Interchange really, really hard. Crow. Remember, why did Crow pump, everyone? Right? Why did Crow pump? Crow pumped because who got into it? The Trump media group. So what happened after the Trump media group got into it? Crow started doing what, everyone? Oh no, that's not good. See? Pumperoni dumperoni. Just throwing it out there. Oscaritos' class, I know you got a poster of Michael behind the room door. No. When my wife and I, hook up, I make her call me Michael. I'm the sailor in this house, so she calls me Michael. And I wear the orange suit, and she has to peel it off like it's a orange. Crow is the Trump pump. Yeah, totally on that one. Totally on that one. I mean, Crow does nothing, pumps on the Trump Media Group investment. People play it, and then they just dump it right off. Oh, yeah. Someone brought this up, asked me if I got up into Gemini, and I said no, I was not interested because they were losing money, and they were losing money while crypto was in its biggest boom ever. This is Gemini's total chart since launching their IPO. They are now below IPO price. Below IPO price. That's why I didn't get into Gemini. Dude, if you are losing money, all right, while this is the bullest market out there, then you know what? You got some fucking problems. So just throwing that out. Just throwing it out there. So yeah, I don't know. Gemini, I wasn't interested. I'm not fans of the Winklevoss twins. Wasn't a big fan. Question, Klaus, do you have any insight on Volt? No, I've not any insight at all. Klaus, is the orange is the new black? Yeah, baby, that's what I want you to say. Call me orange. So yeah, that's the reason why I didn't get into Gemini IPO. Because if I wanted to buy Gemini stock, I could have bought it cheaper than what people got it for during the IPO. Just throwing that out there. XRP, let's take a look right here. We're sitting at 302. Right now getting a little move on up. But remember, Jerome Powell takes the mic in 10 minutes. So that's when the market really starts moving. That's when we find out what's really going on. Steve Dupree says, seriously, you need to become a comedian. My cheeks are cracking. I would love to do stand-up comedy. I think the problem is I might be a bit more raunchy. You know what I mean? Like, I might be a bit not PC. Like, okay, my comedic style, my presentation is very, like, 80s into the 90s. Where, trust me, you didn't give a shit what you said. You didn't care what kind of colorful language you used. It was all just, you know what I mean? Like, it was all just about having fun, right? Nothing was personal. You just said stuff. That's, like, my thing. And now everyone's all, like, butthurt and stuff. Do I prefer Zuck or the twins? Twins if they're redheads. And females. And hot. No Zuck. Bro needs to do underground comedy. Yeah, I mean, like, dude, like, what do they call it? Like an open mic night? They'd probably, like, kick me out quick, but I'm just throwing it out there. What song am I binging right now? Earlier today, I was listening, right before I went live, was Korn's Helmet in the Bush. Throwing that out there. Korn's Helmet in the Bush. I mean, just saying. I was going old school Korn. I'm trying to get my motivation up to start training a little bit harder, but, like, my health isn't, like, the best, so, like, I'm trying to push it, but every time I do, I feel like shit. So I'm trying to find something to kind of, I don't know, like, make me feel better. So it was Korn, Helmet in the Bush. Inflation is going up, not good. Sir Yuri says, as soon as Powell gets on the mic, market is going to dump. Dude, if he's negative, man, if he's really hawkish, that's going to send the market into a spin, dude. Spin. Let's see. Pryor, Williams, Carlin, Cheech, and Chong, baby, are not necessarily in that order. You know what? Who is the other guy? It was the guy that did the Beverly Hills Cop. He was funny, too, back in the day. Eddie Murphy. Eddie Murphy's Raw was nasty. They had that special on HBO when I was a kid. That was my first time I saw it. Eddie Murphy Raw. Andrew Dice Clay back in the day. When dude was all, like, drunk and coked out. That man could spin it, man. I kind of want that honesty. Yes, I am honesty. I am. I bring you the news, good, bad, happy, or sad, and we're all waiting for Jerome Powell. Let's see, Pump Duty, yeah, Eddie Murphy. That's what I said, Eddie Murphy Raw, man. He was Dude, he was a It's surprised when if you ever hear Bob Saget is a rough one as well. He will say some bad things, just throwing it out there. The Dice Man. You gotta love the Dice Man. Raw changed my life for the worse. No, that's not true. Dave Chappelle is like our newer generation's version of like that generation's, Pryor's, Clay's, and all that. Like, because he was a very unfiltered, very creative one too. Theo Von is good. He's in that newer one. Skrillex, yeah, back in the day. Korn and Skrillex, yes, Korn and Skrillex. Have I seen Kill Tony? No. Ralphie May. Okay. Yes, the Fed did cut a quarter. Dave Trader. Balls across the nose. Sometimes that happens when, you're Jerome Powell. Honestly, the market's going to react when he talks. That's the whole thing. The markets are going to react when he talks. You've got all the same tools out there telling everyone we're going to explode and crap like that. Dennis Leary wasn't bad, but he kept doing the same shtick over and over and over. The shtick that he did in Demolition Man where he's like, I want to eat steak and fat bacon with greasy fingers and deep fried pickles and mustard. And so like when he did that whole thing, like, dude, you did that how many times? Like, we get it. Like, it just got old. Just throwing it out there. Disturbed, yes, saw them in concert, just throwing it out there. Robert Schimmel, yes. Anyone, any expectations for Jerome Powell on the mic? You think he's going to be cool? You think he's going to be an a-hole? I mean, let me know. Oh, yeah, real quick, while I got you on. Like I said, I've got a new sound system running this thing, and I've got new monitors, okay? So when Jerome Powell goes live, I've got to put my headphones on. I need y'all to let me know what you think of the sound when Jerome Powell goes live. If it's good, bad, happy, or sad. Just throwing it out there. Yeah, we know it's a 25 NPK. It's been a 25 now for 25 minutes. I mean, come on. Just throwing it out there. I just don't want Jerome to be hawkish. It'll send the markets into a big poop. We're going to have them coming up here in about 5 minutes, so I'm good right there. I'm literally carving out comedy greats into stone to speak. Richard Pryor just done. Yeah, Richard Pryor was really good. Jaselnik all the way. He is, but his humor is the same, like, it's the same structure, right? It's good, but it's the same structure. He doesn't have a diversity in his shtick. It's the same thing with just different jokes in the same structure. Your Pryors could tell stories, they could tell jokes, they could work the crowd. Like that's a different dynamic of a performer. Same thing with Dave Chappelle. Dave Chappelle, if he was getting roasted, could roast that person. But then he also could tell a joke. He could also really go into a good story. He could go on a tangent. Like you have to be very like well versed in comedy to like survive. You can't just be one. And don't get me wrong, Jaselnik is good. It's just the same thing over and over. And I think I just heard thunder, everyone. Let's see. Burr went over the top woke. I haven't seen Burr as of much lately, just throwing it out there. I definitely have not seen much of him as of late. Right now we know the Fed cut by a quarter. We're waiting to see what happens with our favorites. We've got the price of XRP up on the screen right now. 303 is the price action. You can see the reaction from the market too, and how right as soon as the initial announcement was made, the market reacted. But then look, it bounced right back. That's what I said. Don't go after the first reaction. Spend some time. Let the market digest it. Let the news kind of get passed around, and then we will see exactly what the real reaction for the market is. Theo Von, not bad. It's just he needs more depth. He's funny. But I can't put him in the greats category. I just can't, man. I just can't. Just throwing it out there. Clev Dog says Corn, another brick in the wall. Love it. Love Corn brick in the wall. Another brick in the wall. Yeah, they did good. They did good. They did really good. I actually saw they do Another Brick in the Wall, and then they would mash that with Metallica's One, I believe, and that was really good. Just throwing it out there. Theo's podcast is actually pretty good, I will say that. Amarillo, Texas, in the house. Dude, I was on a road trip out to Colorado, and there was a parts store in Amarillo, Texas, that actually helped us out. Yeah, pretty cool. 2 minutes until you know the deal. You know the deal, everyone. 2 minutes until Pow Pow hits the mic. Yeah, I was listening to Korn a little bit earlier. Yeah, Sailor's a freaking douchebag. Oh, God. Oh, jeez. I don't know, man. I don't know, you guys, if I can do this Sailor thing. Come on now. This is too much cringe. He's got to be trolling us, dude. He's got to be trolling us. No, don't get me wrong. Theo Von is funny. But, like, is he the same level as, like, your prior Chappelle's and all that? No, you can't go that far. Come on now. Sailor made me money. Well, that's good that Sailor made you money. He's made my stomach sick every time I got to look at his AI stuff. Yeah, seriously, Bob Saget, I'm telling everyone, he's the guy on Full House. He was the tall, thin dad. He is raunchy AF, man. I mean, raunchy AF. Let's see. Simply Lording says, do you reckon Sailor will trade his bags for XP when BTC tops out? Not a chance. Sailor is going to be a BTC maxi through and through. That is it. I mean, just throwing it out there. Shane Gillis can be put up with the greats. I don't know. Yo, it is storming really bad outside right now. So if we lose the feed, I'm really sorry. Here. All right, so they're blowing out the sound in there. Let me know when he starts talking what y'all think of the sound. Yo, it is thundering outside big time. Holy crap. Oh, there he is. Oh, JP. You ready? Let me know the sound, and I'll up it or lower it. Just let me know what y'all think.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, How can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you, you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening, or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, And now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our, in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do but we have two mandates, and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things, and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies, and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a 0.25 percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Neil.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that, job creation more broadly has slowed down, the economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail, or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and
also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
I'll follow up if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. And it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So, we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy, that's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that. But over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities, and I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Well, there you have it. Jay Powell on the mic. And yeah, you could tell the reporters were a little bit more peeved this time around, right? Their questions were a little bit sharper. I mean, it was It was a rough one. Doran Butler says, what did I miss? All right, here's a good summary for everyone on what happened today. We got a quarter basis cut, a quarter 25 basis point cut, okay? We got that. The market already priced it in. There wasn't much action from the market, okay? The market was really hoping for 50. The problem is Jerome Powell says the economy's starting to show some signs of problems. The problems being the job market and inflation. He kind of is sitting there blaming tariffs and blaming immigration policy on that stuff. Not the fact that rates were left too high for too long. So right now, we're looking at this going, okay, cool. So you may have lowered rates 25 basis points, but because you left rates so high for so long, you really did screw us all over. And one of the comments that he made, which was very telling, was he even said, he's like, people at the lower end of the spectrum are really feeling the squeeze. Yeah, and they're going to keep feeling the squeeze because you've been late to the game. It's what we said. He's late to the party. It's just his MO. He's late to the party, and he admitted there's some cracks in the job market, and he often said that there's no path of no risk, something along those lines, right? And what he's basically trying to say is, look, if he pauses, he screws the economy up longer. But if he cuts, they could risk, setting certain things on fire, like the stock market. Stock market's at historic highs. You might screw up valuations hardcore. So he's basically saying, look, we may have screwed ourselves both times. So, not good at all. So essentially, we're all thinking the same thing. He's kind of screwed us over. I said what you should do is you should watch the charts, not right away, but kind of like an hour after. Seriously, kind of see how the market digests this stuff. I mean, you saw right off the bat, there was a couple of candlesticks right here, printed to the sell, printed to the buy, and then some definitely selling, and then we get back up to that $3 mark. So we're kind of right back where when we started. The market priced in the quarter. So yeah, you're going to have some volatility, some repositioning right here, but it just sucks. It sucks because if the economy, if jobs are bad, if inflation is bad, we've got some bigger problems now. We've got some big problems. And I really did not like how he kept blaming tariffs and immigration policy. He's like, well, we have less jobs, but we also have less workers. Well, then, geez, I'm kind of glad we have less workers if we have less jobs. Otherwise, your numerator and denominator would both be effed. At least only one of them is effed. You know what I mean? Oh, man, this guy's just a tart. Powell just is not, he's just not a good fit for what we need right now. I mean, a Fed chair right now has to be a little bit more dynamic than this. Long story short, the market priced it in, and the market is really nervous about recessions, essentially. That is the biggest thing. The market is really worried about recessions. Telling you right now, jobs, you're going to hear a lot about jobs. You're going to hear a lot about companies, and do they have enough cash on hand to kind of get through this, to weather the storm, and that's kind of why I think a lot of us were looking around going, okay, cool, yeah, you lower it a quarter, but if the damage has already been done, lowering it a quarter doesn't do anything. And that's basically what you saw today was Jerome Powell say, hey, look, the economy might be effed, but don't blame me, blame everything but me. Tyron Copeland says, crypto regs are much needed ASAP. Dude, for real. We need regs fast, and we need to get some ETFs rolling too. Essentially, we need the SEC to start doing something, man. The SEC hasn't done jack, dude. Hasn't done jack. With the thing with the layoffs, all right? I'm getting more and more people message me and reach out to me in the comments talking about their job markets, their field that they're in, their company that they're in, starting to do layoffs because the money isn't flowing in like it used to. this is going to become a more and more common trend. And I got a feeling that you're going to start seeing big numbers. And I'm telling you, I've gone through a couple of these where you would hear stories about 20, 30, 40,000 people in one day getting let go. That's a lot, especially if you have all of a sudden, 4, 5, 6, 10 companies doing that all at the same time. That adds up really, really fast. So yeah, definitely got to start paying attention to the jobs market a little bit more. So definitely got to start seeing what happens at this next meeting. Because at this next meeting, again, if we have inflation going up, unemployment also going up, and we start getting more earnings reports where companies are like, yo, things are effed, dude, there's no path that's going to be a good one. That's going to be a big problem. Fast as you says, a lot of layoffs in my town. Not good. Yeah, I agree. You're going to start seeing this become more commonplace. He should have dropped 25 in May and then see its effects, then possibly pause later. Yeah, see, and that's the whole thing. We've talked about this. We've watched these Fed meetings all year. And wow, early, like springtime, we were talking about cutting. We knew he wasn't going to, but we talked about it. He should have. He should have cut somewhere around June, July, right around that time. Should have cut then, seen what it does, and just let the market go from there, right? And if he needed to, cut it again. But it's just not. It just hasn't been the way he's done it. Has not been the way he's done it. And you got to remember, this is a committee that votes on it, but we know there is some pull by the man JP himself. In terms of the broader crypto market, I don't know. I mean, the market priced it in. Volume is up as we expected. It is what it is right now. The market expected this. I think the market is just going to be cautious. They're going to be really cautious until these jobs reports come out. Krishna says, all we have now is could have, would have, should have. Yeah, and oh, well, we need more data. Or what did he say too? But the data we get is a few months old. Well, if you need more data and the data is a few months old, maybe you should start doing something a little bit different. Right? I just throwing it out there. I mean, oh, God. Powell dropped it because he couldn't take Klaus anymore. No, I don't know, man. I don't know. We got a little Champions League action here. A little Bayern, yeah. Bayern München up 2-1 against Chelsea. Love seeing that. Obviously with a name like Klaus. Yeah, just throwing it out there. I got Bayern gear in my bedroom, by the way. Just throwing it out there. Yeah, it's a shitty situation, everyone. That's the honest truth right now. Is I don't think there's going to be any path that's going to be clear. Whether he raises rates or whether he pauses again, I think we're effed either way. I really do. I think he left rates too high for too long. And again, look at housing. Like, seriously, look at housing. Housing has not gotten better. We're going to be done with another housing season right now here soon, like the big boom housing season. And guess what? It sucked. Prices are still way high. It's just a mess. Krishna dropping support on the channel. Thank you, Krishna. Says Jerome should have asked Grok what to do. Yeah, would have probably been a better thing, you know. Thank you, Krishna. Everyone give Krishna a big thank you for supporting the channel. Glenn says rate cuts turned out to be a nothing burger. Will regs have the same outcome? Gosh, I hope not. I hope not. And yeah, honestly, everyone, I'm very glad to be bringing you the news, good, bad, happy, or sad. Sorry, I just dropped my pen, and I don't want to fucking step on it. Sorry. Yeah, I am. I'm very grateful to bring you the news, good, bad, happy, or sad, and I'm glad to bring these live streams. I think it's great to see tons of people getting in on this stuff. In fact, during the live stream at one point in time, we had over 1,400 people in the stream. That's really, really impressive, everyone. That is very, very impressive. So a big thank you to all for showing up. Let's see. Doran Butler says Grok would have told him to buy Bitcoin. Yeah, probably. I think that's the truth, you know. I don't know. It's the Look, okay. So you know how like I report crypto news and like that's like the center focal point of like all the stories I bring if it's crypto related, right? So part of me is like, all right, cool. You know, I want crypto to boom. I'm super, like, you know, it's really, really what I like to see, crypto growing and all that stuff. But you know what I don't like is I don't like seeing stories about CPI going up. I don't like stories about layoffs and recession. Because, like, crypto is cool, don't get me wrong. But I also don't want people and families to struggle. Because that's a big, big problem. And people already are struggling to afford housing right now. And then you're gonna start taking their jobs away. I mean, yeah, Doran says liking the live stream is free, so make sure you hit that like button. I would greatly appreciate it. Yeah, we finally got a rate cut, but it doesn't feel like it because it was late to the party. That's how you know a rate cut is too late. If when you get it, nothing happens, then you know what I mean? Then that's it. I mean, nothing. All right, so here's the deal, everyone. We're going to take this stream to 3:45. Let me put this in the chat. 3:45 p.m. Eastern Time. Stream ends. Get your questions. I can't type. Questions in now. Krishna dropping more euros on the channel. Appreciate it. To support the channel, drop the like button. It's free. It is free. Everyone, Krishna, big thank you for supporting it. Hey, you're at 50,000 subs. Congrats. When do you burn and crush the Pop-Tarts? I got to start getting, like, just feeling better. I'm still not feeling good. I had my follow-up with the doctor yesterday. Was a little frustrated with that. I just haven't felt in the mood to be creative like that. I've been, like, in the mood to grind news, like, but the Pop-Tarts thing, I want it to be fun, and I want to be in the mood for that. You know what I mean? I really, really want to be in the mood for that. Thing VT says, is Mrs. Klaus happy with JP and the cuts? My wife has no idea what the hell is going on with the market. All my wife knows is 401k going down, is 401k going up. She doesn't care what's the reasons behind it, but if the 401k goes down, she's pissed. If it's up, she's happy. Just throwing it out there. James dropping support on the channel says, thank you. Well, thank you, James. Everyone gives James Walsh a big thank you. Trick, I will catch you later and email you, of course. I don't know. This is just another example of how a system like the Fed just isn't getting stuff done correctly. They're just not an effective organization at all. Frustrating. Very, very frustrating. Let's see. Questions, comments, put them out now. We're going to take the stream till 3:45 p.m. Eastern Time. So make sure you get your questions and comments in right now. I'm gonna pin this message here so that everyone knows. I don't want everyone to get caught off guard. There you go. Let's see. Sam Scott Kim says, it's not Jerome. Ripple XRP reputation is sour. The mainstream doesn't trust it. You know, I've put a lot of thought into that. And here, look, go to DeFi Llama, right? When you go to DeFi Llama and you want to go to stable coins, right? That's a good way to put it, right? Where are people running their stable coins? Dude, most people are running their stable coins on ETH. You look at XRPL, they're all the way down here at 24th. Near Protocol has more stables than XRPL does. Unichain does. Phantom, Linnea, Noble, OP Mainnet. I mean, do those sound like winners to you? I'm just saying. So Ripple does need to do something, but remember that SEC case did not help them out at all. That was a big, big problem with the SEC case. Very welcome for the live stream, seriously. Doran says, thanks, Klaus, nice work. No, thank you all for joining. Chat, this was really cool. For those of you that came or joined late, I joined the chat maybe like a half hour early today just to hang out, even before the stream went live, because I find it really important to connect with the viewer. So I find the chat as a good way of being able to connect. So like when I do my video, I always do, like a video after the live streams to do a summary, and I'll do a summary of this one too. But whenever I do my video after the live stream, I never share individual comments. I always thank the chat. And the reason I thank the chat is because during the live streams, the chat is huge, man. You guys and gals do a really, really, really good job with the chat. A lot of great comments. Lots of good questions. So seriously, chat, shout out to you all for doing what you do. Frodo says, thanks for hanging, Klaus. No, seriously, thank you all for joining. It means a lot to me that we can share a little Fed FOMC meeting action. I greatly appreciate that. I don't know. I'm just a little upset with Jerome Powell being late to the party. I mean, we all knew it was going to happen. By the way, the Gemini IPO launch is not going so hot. Everyone is in the red right now. Think about that. Everyone is in the red right now for the Gemini IPO launch. Down 14% today. Boom goes the dynamite, girlfriend. That is not good. Peter says this was awesome. Be into the next one. Well, I appreciate that. Greatly appreciate that. Yeah, if you got your last second questions, comments, now's the time to drop it. I will be doing a summary video later today regarding what happened. But I think this is crypto. Kronos, right? Got a big pump from the Trump media group. What happened? Dumped afterwards. Gemini IPO, pumperoni, dumperoni, right? I mean, I think this is crypto. I mean, Gemini basically Jerome the buyers, yeah. Gemini has been a huge flop spot. People were rushing into this thinking Gemini was going to be the next big thing like Circle. No. Circle makes shit tons of money. So does Tether. Gemini is losing money every quarter. So why would a company that loses money make a shit ton in their stocks? They wouldn't. And that's why I did not get into it. Poop Soup says, thanks for the long live. Love the community we've built here. Yeah, seriously. The chat and the community and the group, the comments, they're just great. I mean, y'all do an amazing job. Let's see. XRP Dude says, I got to say, I'm relieved that he did not pause. I was seriously expecting it. I really was. But now that he gave us a quarter, even me, I'm sitting here going, okay, now that you gave us a quarter, he did give us a quarter cut. Red Corner EDC says, did he cut? Yes, he gave us a 25 basis point cut. Now that he gave us that, it doesn't feel like it happened. This just feels like a regular Wednesday. The markets don't really give a shit. I mean, Gemini on the screen doesn't give a poop. You look at the cryptocurrencies across the board, and, I mean, they're not melting any faces right now. I mean, let's be real here. Things have kind of meh, right? Yeah, I know. Ellis Perry says Jerome Powell does not like Trump, so he in no way wants Trump's presidency to have any positives. Yeah, Powell blamed tariffs and immigration policy for why the jobs market is doing what it's doing. Yeah. Just throwing it out there. I mean, this is just garbage. Just freaking garbage, man. Now, that being said, though, honestly, bigger than rate cuts is regs. Bigger than rate cuts is ETFs. Just throwing it out there. All right? Like, just throwing it out there. I am telling you right now, that market is going to move way more on regs in ETFs than you will see on any rate cut. Krishna says this is for your doggies. Hopefully, you can buy them some treats to cheer them up. I appreciate that, Krishna. Yeah, we did. We lost a dog family member this week. It was my super mountain climbing dog, Leia. She is a sweet girl. And she made it to 10 years old exactly. Like, 10 exactly. And her and I traveled, like, all over the United States. We did all sorts of hiking adventures and stuff like that. Really sad week. So I will definitely do something for the dogs because the dogs are a huge part of my life, as y'all know. The dogs often disturb me in the videos. So just throwing it out there. So Krishna, seriously, thank you for that. And the dogs greatly appreciate it too. It's going to take some time. I'm gonna try to think of something creative that I can do for animals coming up. I want to do something. I want to do something big. We've got a humane society out here. They're really small, but maybe I'll do something for them. I don't know. I'll figure it out. Man. Alan Short says, really sorry to hear about your that you lost your dog. Knew she was not well. Yeah, I brought her in on Tuesday to the vet, and we knew she was not really eating. She was just tired. And, like, she jumped out of the car, she walked inside the office, and she just would lay there, you know what I mean? Like, you could tell she was just tired, and she's older. Like I said, she's 10. From Tuesday to Thursday, she got so bad so fast that, like, even the doctor gave us, like, a 1 month thing of medication for her, right? She didn't even last 4 days after she saw the vet. Like, so even the vet was shocked how fast and how bad it got. It was really, yeah, it was sad. It was sad. Oh man, it's just sad stuff. Krishna says, you're welcome. I have birds as well. I've lost a few, and it's hard for the others as well. Yeah, the other animals definitely notice it too. The other animals definitely notice it. The puppies, the boys I got, Vader, the black one, the real big black one that always seems to come in here and you see me rubbing his butt on cam, he's been really down. Him and her were really good friends, because he was a very chill dog. He's so big and fat that, like, him and her would hang out all the time, like hang out on the couch. They would hang out in the backyard together. They would sun together. Really, really cool, you know? Well, anyways, he's been really, really down. So that's been really tough, man. That's been really tough. So yes, animals do notice it. We've got another minute, and then we're going to shut down the stream. I'll hang out and chat a little and hang out with y'all cool people. If you got questions, comments, now's the time to do it. We're going to go to this. We're going to go to this. We're going to cue this up right here. We're going to pause it. Pause it, because you know the deal. I don't want to play it just yet. Yeah, just frustrating day, though, today. I mean, just frustrating day with Jerome Powell. George Lair says, Arrow and Jupiter are high-risk rewards. They don't listen to me, though. I love them in my mom's basement. Yeah, it's doggies are huge parts of our lives. Like, they really, really are. I spend time with my dogs, like, all day long. Like, I work from home, obviously, so I am with these doggies all the time. And look, see, like, even she went with me, like, everywhere. Every adventure that I did that was like an outdoor adventure, she was the dog that I brought. Like, anytime I traveled, my wife would be like, yeah, you got to take her with you. So, yeah, super, super sad, you know, but like I said, she got to hang out in nature. She got to see all the mountains and like, look at her. She's out there playing. I caught her in action, you know, having some fun out there. So yeah, it's awesome. It's awesome. All right, everyone, this is what I'm going to do. I'm going to play some music. You know the deal, Lemon Peel. I'll play some music, hang out in the chat for a couple minutes. I'll catch you cool cats later.
Baby, you give me ice and fire.
And a big thank you to Momo Velcro, hopefully I said that right. It says, thanks, Klaus. No, thank you for supporting the channel. Thank you, everyone. It's been great. I will do a recap video on what happened today with Jerome Powell and the Fed. Thanks for being so active in the chat. Thank you for clicking the like button on the way out. I will catch you cool cats later. And of course, hold on. I'm not done yet. Jeez. See, the people that stay at the end of the stream get to see it. Choo choo what? Well, you know the sign in the background. You see it over my shoulder. My right shoulder, that is. Choo choo what, everyone? Choo choo bitches.
You're chilling in the rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my